In this video, I'm gonna test the trend duration forecast strategy to see how well it performs and whether it can actually grow an account over time. I'm trading it on BNB, on the 1 hour chart, following the indicator exactly as it is. Green means I go long, red means I go short, and every position risks 2% from $1,000 starting balance. No stop losses, nothing extra. Just letting the signals play out so we can see what the thing's really capable of. I'll run 30 trades, make a few adjustments, then do another 30, then finish with the final round of what's left to 100 trades to see how much improvement we can actually get out of it. Let's get into it. So for this strategy you need an indicator called trend duration forecast. As you can see, this indicator shows you the probable length of the trend. This length is measured in candles, so probable length 24 means that the indicator predicts that this trend will last 24 candles. As you can see, it lasts more. Then it changed, the probable length is 19, so it predicts that the trend would last 19 candles. Again, a little more, and this is how I'm gonna trade it. I'm gonna wait for a trend change, I'm gonna open my positions with the trend, and then I'm gonna wait for the probable length and close it. So now it is an uptrend, so I'm gonna go long and wait for the real length to be 28 candles. Okay, unfortunately this one did not play out, but still, if the trend reverses without reaching the probable length, I'm gonna close the position and open in another direction for the trend. Again, for the probable length duration. Okay, then when the real length equals probable length, I'm gonna close the position and wait for the trend to change so that I open another position. That's how I'm gonna put the first 30 trades, and then see you after. Okay, so let's take a look at how well it performed. Firstly, the first thing you're gonna notice is that there's almost no PNL. Why? Because there's almost no ROI. If you take a look at our ROI, then it stays within 1-2%. And with our win rate of 50% and profit factor of almost 1-to-1, we pretty much earn what we lose. With, as you can see, most of the time being in a drawdown with less money than we started with. So to somehow capitalize on it, I would honestly put a 20x leverage on our $1,000 and go all in, because the drawdown kinda allows it. Still risky, honestly. Three close calls out of 30 positions. I guess 20x leverage would be enough, but even with 20x leverage we would earn like $42 out of $1,000 invested. That is not that much, and that is 100% not worth the risk. On average, in our position we earn around 1.5% profit, but in average position we are around 2% in the drawdown, firstly, before closing it, and secondly, we have around 2% more of retracement, meaning that we open 2% too soon and close 2% too late. While we earned 1.5% on a winning trade, we miss the opportunity to earn on average 4% more. That's why, if you take a look at improved run targets and perfect run targets, then we will see that, bearing in mind that we start with $1,000 initial capital, 20x leverage to make it $20,000, then with 30 positions we gonna earn a quarter of our account if we get at least some improvement with drawdown and retracement, and we will earn almost half of the account if we're gonna see a pretty big improvement in these metrics. So what I'm gonna do for the next 30 runs. So instead of taking the position immediately, I will wait on this drawdown and take it at least 1% against the position, thus making it a way better risk to reward ratio. Okay, let's see whether it will help us or not. Okay, it did not go according to plan at all. As you can see, we have worse everything. Worse PNL, even though at peak we were reaching 1200, still because of way worse win rate, we ended up losing money, then way higher retracement, way higher drawdown, so pretty much everything is worse. And this is without even considering the leverage. With the leverage, it's gonna get even scarier, you're gonna lose a lot of money compared to the first run. Even our targets do not show us profit, so unfortunately I think I went wrong direction with this one. So what will I do differently in the third run in the next 40 positions? Firstly, I will try to eliminate that drawdown and retracement. Also trying to heighten up the win rate. What I saw is that oftentimes the position does really go into the profit. It's that just I close it too late. So instead of waiting full probable length, I will wait half of it. Also, smoothing lengths. I feel like it is just a touch too slow, so I'll put 10 instead of 50 and 1 instead of 3 for trend detection sensitivity. So let's see how it goes. Let's get some new trend. Okay, so let's go. 5 instead of 9. So I buy. And now I close it. So let's see whether will it help us. So unfortunately, it did not help us. Even though we did really have the highest peak at almost 1300, we also had the biggest drop all the way to 500, so it's like 50% of our capital. But still we are in the negative PNL as well as negative ROI, even though it kinda improved related to the previous run, but it got just worse related to the very first run. Even though we have the highest win rate, but the ratio of average win and loss per trade, it's just different. So as you can see, our losses are bigger than our winning trades, and drawdown as well as retracement just got even worse. That's why, unfortunately, by the end of this video, I have to conclude that at least for BNB and with the tweaks I made, this strategy is not consistent as your primal data source, and I would not recommend to trade it. But give it a try, maybe you will be better at it. See you in the next one.